because for something's wrong with my bandwidth. But I noticed something like back in December. Just I always take a look at like the macro stuff, and using the index or one of these charts that goes all the way back to like at least pre 2015. And and this is just a small thing that I'm just like still looking at. But one thing that I noticed is that whenever there's an extreme deviation on, like an upward deviation on Bitcoin, and there's two in a row, and the magnitude just has to be above average. But as long as there's two of these magnitudes, you always touch down to a level that would be approximately the 200 on the weekly chart, right? So you can see I was just musing about this in December 28th. Like we didn't know we were going to like plunge down to hell or anything. We're still around 50,000. We just like had a dip that was pretty average because we have lots of dips. We have dip, we have a dip, we have a dip. We have dips all the time, just like we have little pumps. And so like this, like everyone was still saying, "Oh yeah, but we're going to go to 100K. We are going to go to 200K." And the reason I charted this out, back in December, and when a lot of people were still hopeful, I was saying, I don't think we're going to go to 200K. I think actually we're going to go to hell because we were fast approaching the 50. So the 50 EMA is kind of the critical point. When it gets crossed after two major deviations on Bitcoin's price action, the behavior of Bitcoin has always been to return to the 200 on the weekly. And here we have one, here we have one, the major spike, and then we return to the 200. Now we can sit around the 50 for several weeks, even months, but we eventually return to the 200. And it doesn't matter how far apart they are. As long as you have that deviation and then you get below the 50, you do it again. This was the COVID dump, but it may actually have been triggered already in advance. Like the COVID may have sharpened it or like accelerated when it happened, but the potential was already there like once we crossed the 50. And here we rode above the 50, and then we had two major deviations, right? Bounced off of it basically. But when we got under it, now we can see like a different picture. And this is just a little bit more of just me spelling it out. Like, well, this is a lot of just. So we can see here like a decline of approximately like 85%, a decline of 70%, and this is all the way back to 2017. The previous one was 2011. But you can see how these declines are. They're like you can get a fall up to like 60, 70% and get into these like a 50s area. But then you can even fall up to like a 85%, right? So here we had a 45% until we like broke the 50. And then after breaking that, like it was almost guaranteed that we were going to go down to like this 70 level. And here I was just hypothesizing. I was saying, hey, like we're down 40% and we just had broken the 50. And so I was hypothesizing, we could come as low as 70% down based upon the statistics of these other breakdowns on the macro. And where would that be? That would actually be in line with $20,000. And
Oh, yes.
we hadn't even formed a shoulder to, I mean, we were sort of forming it, but like obviously we've completed it now. But we were forming the shoulder. And people say, head and shoulders, they don't work out on Bitcoin. Head and shoulders, they don't work out on Bitcoin. Well, actually, they do. It's just that Bitcoin has a lot of fake head and shoulders. They have a lot of invalid head and shoulders. And there's a lot of reasons why, like a head and shoulders can be invalid, but that's just a different question. But this one is a valid head and shoulders, and it does follow this pattern. And we have officially broken, here at like a 43. Let's see the 50. So this was January 5th. The previous one was like December 28th. And the way that I can like pattern this out, so like these are normal candles. So you might see some price over here, like 38,900 is what we're at right now. They're going to change with the Heikin-Ashi candles because Heikin-Ashi candles take a different measurement. But if I put on the Heikin-Ashi candles, so ignore this of 40,900. It's measuring a different type of candles like close point. So just ignore that number. But Heikin Ashi candles are good because you can see like red and green. You can see like the red and green very easy. It smooths it together. Let me take off these EMAs. So here you can just see like the green flowing and the red flowing, green flowing, red flowing, green flowing. It's not like red, green, red, green, red, green, red, green, red, green. That's the beauty of Heikin Ashi candles versus standard candles. But ignoring the candle type, basically what you have like a green point, uh, you know, a red. This is the beginning of Bitcoin, right? This is still 2015, but anyway, the pattern continues like even before that. And then you have green, and then you have like a deep red pullback, which is a flash crash just as low as the previous crash that you had. That was, you might have thought, oh, we had a bear market here, but eventually you have a flash crash that's just as low. In other words, it does a backfill. So you always have this type of a backfill, or you could call it a retest on the macro, right? And so this has like I draw a blue line between the two of them. So you have, you know, a high, a low, a high, a crash, and a recovery, and then a flash crash just as low as the previous crash. And then you skyrocket, right? Skyrocket, 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 and you skyrocket for a long time. So green, red, whatever, you can get the pattern. Green, red, green, recovery, and then a deep red flash crash with a flash crash. And I drew the blue one here. The pattern continued, and then you skyrocket for a long time again. And here we had like the green, the red, oh, bear market, green, and then we're missing the deep red, right? We haven't had it yet. And so I'm hypothesizing that, if you look at like all of these different like models together, then potentially we are going to see something deeper red than what we think. And it may not look the way that you expect because it can play out, you know, there might be this angle here, and then we might have a bump. Like we could get a bump, right? We could get a bump, and then we could fall back down to the same level, and then we could rise up, and we might have a wick all the way down to this level, right? And then that's what we're going to actually find is going to be our new low. People might think that like this is over whenever we start bouncing up and that we're going to, climb to heaven. Just like people thought we were going to go to 100K or 200K like off of this low. But that wouldn't have fit any pattern that Bitcoin's ever had. I know some people tried to say, "Oh, it's like 2017, it's like 2018." It's like they're always trying to shoehorn it into something. But that's because they wanted to target the Plan B's number of 100K or like 200K or $1 million or whatever they think should fit. But what Bitcoin is really telling us on the macro is that it has this pattern before it skyrockets, and that it plays out this backfill, or you could call it a retest, you can call it whatever you want. But whatever it does check back. And so I'm just hypothesizing that either we could go horizontal for a long time and maybe even have a flash crash deeper, but we probably wouldn't go below the summer. Or we could climb up and then have a flash crash or something. But this pattern is very interesting. And if you use the EMAs again, like we're just crossing the 50 here, and we've done this type of behavior before, where we get below the 50, and then maybe we pump up. Like here, it connected to the 89, right? The 89, which is very rare. Bitcoin almost rarely ever touches the 89, but when it does, it bounces up and it crashes down. Bounces up, crashes down. If we get a bounce here, I'm just putting it out there for you guys to think about. If we get a bounce here, you might want to be traders, like just always have your trade mindset on, and don't get into like that zone of compliance that social media and the big influencers are trying to tell you 100K, 200K, $1 million Bitcoin, like we're just going to go forever, because probably just statistically based on back testing anyway, like there's a high probability that we can tag the 200. And if we do have a bounce here, then the 200 is going to rise. So it could come up to the 30. It could come up like if we get a nice bounce off the 89, and if this becomes our tradable area, then these are going to curl up the 200's going to curl up, and then the 200's probably going to be here in a in a couple months, and we're all going to be feeling really good again, and then it might have its behavior to check back to the 200. And so those are probably the levels that you really want to, be able to buy to change your life, because then what we know is we have these major runs, right? These major runs, which that's sizable. I mean, these two were close together, but again, it may have been accelerated by COVID. And because it was accelerated by COVID, I think some people thought that like we didn't have to have one, but there doesn't seem to be any like spacing rule. There's no like specific time to it. Some people have tried to put fib times into it, and what I'm thinking is a little bit similar to what Red is thinking about how the market, because of the big investors. Um, Pre-COVID times, we didn't have the entertainment industry, we didn't have Facebook, we didn't have, all these big players like, getting into like a gaming, banking, all this DeFi stuff, all these specialty like applications that have real world consequences, NFTs, all this stuff. And so again, like we're moving into an era where there may be sectors that are up or down inside of crypto, and also, there may be more cycles and a flatter curve rather than a vertical blow off top that then crashes 80, instead of blow off tops that crash down, there may be more kind of like a wave pattern. But these waves, just like in the stock market, they also need to touch base sometimes. And so I just wanted to throw that out there. It's just something interesting that I noticed. And, a lot of the times where people lose their money is when they get too bullish too early, and then it all turns around and they're lower than when they started. And so like the same principles that you're learning right now, like you may want to just keep in your back pocket just in case it doesn't work out the way that you think that this is the bottom, because maybe it's not. Maybe 35 is not the bottom. Maybe it pumps up. It could even pump back up to 60, or 70K. And then it could come back to a flash crash and then we take off for a long time. And that would be consistent with its behavior like this. Um, Also, the average of these two peaks, is quite interesting in that this was a rounded top, and that's something that we hadn't really seen in Bitcoin before. And so, uh, the fact that it's rounded means more controlled by industry. So, so maybe we don't get as harsh of a punishing, maybe it just skims it or something. But these rounded indicators are indicating that we may be going to more waveform for crypto in the long run. See if I can get a clean chart here. But we do have this, you know, again, if we are going to bounce, like this should be the area to bounce. And then assuming that this is actually playing out the way that like some of these things play out, you know, you might want to get wary again around the top here, maybe around 70K. So even if everything goes really well, this doesn't necessarily have to break here, right? It could come down and break down and then skyrocket. This is ugly as heck, right? Like this structure. What is this structure, right? Like these structures don't have to look pretty. And so if people are just showing you, like if influencers are just showing you like very pretty triangles and stuff, just remember they can get sloppy as fuck, right? Like real life intervenes. And so, they might say, "Oh, it should break out 70% of the triangle," and historically speaking, it's gonna go up, but it could also break down. So it might go up here to 70 and then break down, flash crash, come back before it comes on its way. I mean, you can draw it however you want. These things are, like you can always fit a triangle or something everywhere, but they can do unexpected things. Anyway, I just wanted to share some thoughts on this because I think a lot of people just think like, there's like a clean structure or that it has to follow, specific fibs. But we'd already be at 100K if that was the case.
Hmm. Interesting,
Anyway, I'm
SkyFi.
I'm done. Just thinking out loud.
Okay, okay. Um, yeah. Well, good night, everyone. I'm going to sleep. So
Good night, Yentley.
I'll catch you guys tomorrow. And
Also,
yes,
also,
yes.
what's kind of interesting? This thing formed a inverse head and shoulders right here. I've never actually really noticed that before. Kind of.
Hmm. That would be awesome if we see the same kind of pattern.
And then it took us up here from, once we formed that. Like if we did have a major dip and then we had a little dip, we would form another inverse head and shoulders, right?
Oh man, I really want to see 24K, 23. Please. We can short all the way to the bottom.
Right. Like
And
if
then,
we went to the
oh,
200,
yes,
and then
please.
this might be our
Yes.
first tag, at 100K. At 100K exactly, that would be like if we tagged the 200, our measured move would be to 100K, and then maybe a pullback, and then we keep going,
Hmm.
just like here.
I really think that 79K is gonna be the next big resistance. That's what I think. Like almost to the 80,000, and everyone is aiming again. Like, yeah.
Yeah, this is just, and again, this is just amusing. It's just thinking around. But again, if this is a macro triangle, there's also the measured move of the flagpole, right?
Hmm. Okay, I'm gonna head off, guys.
Yeah. Good night,
See ya.
Yentley.
See ya.
Night.
Yeah. The flagpole would line up with the move of a head and shoulders that touched, 25K. Anyway, I'm gonna head out. All right, guys. Have a good night. Good luck with your trading.